Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. The markets took a step back on Friday. Was that just because of expiration? Interest rates continue to tank. Noted macroeconomist Raoul Pal in a publication last week talked about how he sees some storm clouds on the horizon just as we have, and the fact that interest rates dropping the way they are with the dollar moving higher could have further repercussions. We'll talk about it. And Bitcoin continues to consolidate in that descending triangle. Is the breakout coming soon? Appears that way. Let's take a look at the charts. At the time of this recording, it is 10:45 Eastern Time on Sunday evening, and currently the futures are down just under 20 points. They opened flat, moved to the downside till around 8:30 Eastern Time, and have been flat since then. Taking a look at the charts of the market, you can see Thursday we actually had a pretty nice doji, and then there's that downward bar I mentioned in the intro on Friday. You can see it also was an outside day, meaning the high of the day exceeded the high on Thursday, and the low of the day exceeded the low on Thursday. Pretty interesting that we opened at the highs and closed at the lows as well. When we look at the 10-day moving average, we broke the 10-day moving average. Is that significant? Well, really what's been more significant, as you can see here, has been the 50-day moving average. When the markets come down, the 50-day moving average has held and allowed the market to go back to the upside. So we're not quite down to the 50-day moving average yet. So could it have just been expiration Friday volatility? Tend to get a little bit more volatility on expiration Fridays, at least historically. When we look at volume, you can see it was just average, and that's really not that great a volume for an expiration Friday. Now, in the last recording, we looked at the Elliott Wave long count and talked about how there was a level at 460. Well, I thought we'd look at the weekly chart of the SPY, and you can see with this zigzag pattern here, we also have a potential target at 460. Now, we've been, in the past recordings over the last several weeks, been talking about storm clouds building on the horizon. It's important that you trade the markets. The markets have been going higher. We've hit 4 consecutive zigzag targets. So you hit a fib target, Elliott Wave projection, and then you look for the next one. You follow along with the charts. But it's also prudent to be aware of these storm clouds that are building. Now, I've used that analogy since I live in Florida. And the way it works is that the higher those storm clouds go, the stronger the thunderstorm is going to be. I think that analogy still works. In other words, the higher the market goes, the more severe the correction is going to be when it finally comes. Can the market shake off what's going on right now and reach 460? Possibly. That would be the next level. But again, as a reminder, we've hit a number of levels and the market is already very extended. In our Trade Finder meetings, we've been talking about bond yields and what they could be foretelling for not just the U.S. economy, but global. And by the way, if you haven't attended a Trade Finder, please do. You can sign up with the link in the comments section or go to our website, ewotrader.com. We talk about the markets every Tuesday night. We look for trade ideas. It's free. Love to have you. But we've been discussing the fact that with bond yields going down and the dollar firming up, looking at this DMI, you can see there's the ADX telling us, yeah, there was strength to that move. Remember, when the ADX is telling you the strongest part of the move is over, it doesn't necessarily mean the entire move is over. And so when I see something like that, I then default to the CCI, which is a more responsive technical indicator from a day-to-day standpoint. And you can see there's plenty of room for an upside breakout out of the dollar if the dollar wants to move to the upside. Yesterday, a friend sent me a video from a man named Raoul Pal. And if you're not familiar with him, he's the CEO of Real Vision Finance and a noted and respected macroeconomist / analyst. My friend sent the video along with the comments, hey, this guy sounds just like you. In other words, he's saying the same things that we've been talking about what these bond yields, the dollar, and even the Fed may mean.
And I've said this before, when the dollar starts to move and bonds start to move, there's something going on that you need to pay attention to from the macro perspective. So the question is what is going on? So the narrative started that the Fed were going to tighten, they changed the dot plot. And that started flattening the curve, as it should do. And I've been eyeing the CESI, the Citigroup Economic Surprises Index. Usually it trends, and we will see longer than expected weaker data. So if we're getting weaker data, then the bond market is probably telling us that we have a growth surprise, potentially to the downside. And the dollar tends to be a beneficiary of a low growth environment. It's not a rate-driven story, and the dollar rarely is a rate-driven story.
So it certainly instills confidence when somebody of Mr. Powell's stature is saying roughly the exact same things you are, or seeing things the same way that you are. Now, Mr. Powell talked about the fact how the strong dollar may be difficult for gold and silver in the short term, but also the fact of, could the Federal Reserve actually do another round of QE? And if that happens, that maybe any weakness in gold and silver would just be short-lived. Something else to note about gold and silver is the two charts are pretty similar now. Remember, for a while, they were out of whack, discombobulated, if you will. But the synergies that usually exist in the market, when they do get out of sync, they usually work themselves back in. It's usually fairly short-lived. And so if we do have any short-term weakness in gold or silver, could be good buying opportunities if the Federal Reserve does inject more QE or the government give us another round of stimulus. That should certainly be a positive for the metals moving forward and commodities in general. Looking at Bitcoin, in the intro, I talked about how we'd moved right into the point of that triangle. And look at that. At the close on the 16th, we have a doji there right in the point of the triangle. And the live chart at the time of this recording, because remember this is end of day, Bitcoin is up a little bit, but it's not broken out of the upper trend line yet. And as you know, I've rounded these levels off. We're just calling support 30,000, resistance 40,000. But the fact that we are so far down into the point of that triangle now, it looks like Bitcoin is ready to make its breakout move. So fasten the seatbelts. It could be a significant move. Can't tell which direction, but it's going to be fun to watch when it does move. I thought I'd add in a chart of the Qs. For quite a while, it's been the best chart in the market. As you can see, they were going up in that 45-degree angle that I really like. And then we take a look at the DMI. Had a really strong looking DMI chart, very supportive of that move higher. And then we started to go a little bit more vertical. So we kind of broke away from that 45-degree angle. And if you've heard me talk before, you know I don't like it when things go vertical, because when they go vertically up, quite often they come vertically back down. And if we look at where the Qs are now, you can see that weakness from Thursday and Friday, which has also brought the positive directional indicator back down below the ADX. And the ADX, which doesn't tend to be all that responsive from a day-to-day basis, did tick down on just those 2 days. So a little chink in the armor, if you will, on the Qs, which have been leading the market, at least over the past few weeks. Looking at the VIX, as we always do, you can see there's that 16 level, held again, bounced off that 16 level, and there again could just be volatility from expiration Friday, or that's a pretty decent bar, and we close near the high. Are we going to get some follow through at the beginning of the week? We'll have to wait and see. Please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thank you. We appreciate it. Hope you've had a wonderful week. Have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.